you take the number of shares that we issued, plus that should be
no,
6 over 5.
No, your bonus factor was market price divided by your TERP price, theoretical X right price. Now, do you remember what was theoretical X right price? Theoretical X right price was that how much the share price would be after the bonus issue. Listen, guys, you were selling shares for $1.8. This was the market price of the share. It is given in question that your one share is selling for $1.80. You started issuing new shares at $1.50. You said that whoever has 5 shares, I will give him one new share at 1.50. Yes or no?
Yes.
Now, when you are issuing shares at a lower price, don't you think that the market price of the share will go down?
Yes, sir.
It will go down. So we call it TERP. TERP means theoretical X right share price. Theoretical X right. Why do we call it theoretical? Theoretical means that what would happen in the market in reality we cannot know, but mathematically, logically, rationally, this is how much it should be. When I say theoretical, it means that based on the calculation, it should be like this. Now, what it will be in market, we don't know. So here you say that, how do you calculate it? It is very easy. You said that whoever had 5 shares and the price of one share was 1.80, he will get one new share at the price of 1.50. So it means that somebody who had the investment of $9 will get another share at $1.5. So it means that the total investment, so the total number of shares will be 6. Now this topic I explained in a lot of detail. I did this question before.
And what 5 divided by 6?
So you said that any investor who holds 6 shares now, his total investment is 10.5. So it means that his average share price, his TERP, you call it TERP, will be 10.5 divided by 6. So it means that the share price is expected to fall to 1.75. Am I clear?
Yes, sir.
Yes, sir.
This 1.75 we are going to use. Where are we going to use it? We have to calculate our bonus factor. What is bonus factor? I'm going to explain you later. Actually, I explained it. That video, EPS video, if you go back and watch, it was full 1 hour 47 minutes. We discussed it in detail. But bonus factor, market price, what is the market price of the share now?
1.75.
1.8.
1.8.
Sir. Yes.
1.8. 1.80 is your market price, and your TERP is 1.75. So you actually divide these two numbers, and you get your bonus fraction. You call it bonus fraction. Let me not call it factor. Let me call it the right word is bonus fraction. And your bonus fraction is 1.8 divided by 1.75. So here you go and you multiply. So what is your weighted average number of shares? Your weighted average number of shares is that you've got from 1st May to this period, your shares are this much, 5,000 shares into, this is here. And when you go to the next period, your number of shares are 6 million. And I just remove it. This I don't need it. I just was showing you. So actually what happened that in the first 5 months, you had 5 million shares. So you said 5 million multiplied by 5 months divided by 12 months multiplied by the bonus fraction. For the next 7 months, from 1st June to 31st of December, you had 6,000 shares because you issued bonus shares. And you just put these numbers here. And you put here. And you make a total. So your total number of shares, weighted average number of shares will be 5642 or whatever it is. 5643. I'm going to explain. Wait a minute. I will explain. Your weighted average number of shares are 5643. And now you have to calculate your EPS. So of course you will, now that's a 2 marks question, by the way. I'm spending a lot of time because I'm also explaining you the concept. So your EPS was here, which means that EPS is, your EPS will be, earnings are 7.6 million. It is given in the question, and 7.6 million earnings divided by this weighted average number of shares. And here you get your EPS, this one divided by this one, which is 1.34 or whatever, 1.35. This is your EPS. Now, wait a minute. Hold this one. Let me go back step by step and I will explain you what did I do and why did I do. In this question, actually, this earnings per share was given to us. It was very simple. It was very easy. It was given. But we also need to know, we also need to calculate weighted average number of shares. Now, weighted average number of shares means that how many shares do you have for which period? Now, you know that you have got 5 million shares for 5 months and 6 million shares for 7 months. You issued shares during the year. So you can do this very simply. But the IAS 33, it says you that you also have to, if you have issued bonus shares or if you have issued, right shares, you must multiply it with the bonus fraction. And the formula for bonus fraction is market price divided by theoretical X right price. Now, market price was given, was not a problem, but TERP we need to calculate because I need here, I need to put this number. I need this 1.75. This is something.
Sorry, how do you get the 6 million?
For the
second period?
Yeah, because they give shares 1 for 5.
Yes.
For every 5 shares you give 1. So you had 5 million shares. So yes. 5 million divided by 5, it means that 1 million new shares you were issuing.
Oh, okay. Okay. Thank you, sir.
Okay. Now I need to multiply it with the bonus fraction. And bonus fraction, if I have to calculate, I need to calculate the TERP. So for TERP, then I calculate like this. So do you understand my point? Is it clear until here? I still have to tell you.
Yes.
Now you may ask me, why do you multiply it with bonus fraction? Yes or no? I explained this. Actually, I explained this logic before, but I'm just afraid that maybe you forget. Emmanuel, can you tell me why are you multiplying it with the bonus fraction?
Because you explained before that in case of, say, we are working in a company and we have, at the end of the month, they have to give us a bonus. So we have to spread this bonus over the entire year.
Exactly.
Yeah.
I'm happy that you remember the example. So this was the example I gave. Like you are giving bonus. Actually, let me tell you, if I don't multiply it with the bonus fraction, let's see if you don't multiply with the bonus fraction, you know what will be our answer? Let's suppose I remove it. Your answer was, if you only do it like this, your answer will be 2083, 2 million shares. Here it is 2143. So you are increasing number of shares. So what we are saying that actually these bonus shares which we gave on 1st of June, you are issuing shares on 1st of June, right issue. This right issue, some part of that right issue shares, like how many right issue shares you are offering? 1 million. Some part of that you have to give for the first 5 months. You issued here, but why do you issue? Because these shares, they stayed with you for 5 months. So you need to allocate some part of that bonus for the first 5 months. Okay.
Sir, sorry, I didn't get this completely. So what bonus fraction is doing? Because taking market price and then dividing by TRP.
Divide by TRP, and this what it will do, it will increase your average. If I don't do this, your average will be 2 million.
Average.
Now average is increasing. I give example. Let me do it very quickly. Let me give it very quickly. You've got January, February, March, April, May, June. This was the example. You issued here, but why do you issue? Because these shares, they stayed with you for 5 months. So you need to allocate some part of that bonus for the first 5 months. Okay.
Sir, sorry, I didn't get this completely. So what bonus fraction is doing? Because taking market price and then dividing by TRP.
Divide by TRP, and this what it will do, it will increase your average. If I don't do this, your average will be 2 million.
Average.
Now average is increasing. I give example. Let me do it very quickly. Let me give it very quickly. You've got January, February, March, April, May, June. This was the example I gave in the lesson. Let me repeat it again because that is a good example to understand. Okay. And let's suppose that your monthly salary, Ankit, your monthly staff cost, which means your salary, let's suppose whatever, is $12,000. So you give 12,000 every month. And then what you do, that in December, you give a bonus also, which is called the 13th salary. You give 12,000 extra. So in December, you actually are paying 24,000. But IFRS or whatever the logic says, that why did you give this bonus in December? You give the bonus in December because people, they remained with you in the first 11 months. Yes or no?
Yes, sir.
So this 24,000 actually, it is given in December, but it is not the cost for only 1 month. It is the cost of all of the previous months. So what you should not be adding here 12,000 like this. What you should be doing, you should be adding 1,000 on each month. Do you understand my point? And you should be saying that my monthly staff cost is 13,000. So you split the bonus over the period to which it belongs. The total will remain same, but instead of showing 24 here, I show 13 throughout the year. Does that make sense, Ankit?
Yes, sir.
Now my question is that we are giving 1 million shares in June, right? Why are we giving it in June? Because shareholders, they remain with us from January to May. So some part of that belongs to that period also. So we have to allocate some part of the bonus. You are giving 1 million shares in right issue. And within right issue, there is some bonus. Why there is a bonus? See, what is the market price of the share?
1.8.
For what price are you giving them?
1.5.
So you are some part of the share you are giving for free. Yes or no? 30 cents.
Yes, sir.
30 cents.
Yes,
Discount. And this discount, it belongs to the first 5 months also. Yes. So we take effect in the first 5 months. So this is logic. If you understand it 60 or 70%, this is okay, because when you will apply it in your life, you will become 100% clear. But you should understand that I am giving right issue on 1st June. Right issue, it does have a bonus part of 30 cents. And I am giving right issue to existing shareholders who stayed with me. I'm not giving right issue to outsiders. So I'm giving right issue for also because of the first 5 months. So therefore, this bonus, in some part, should be transferred here. So logic is clear that we should give there some part. Now, the question is that how to calculate that? That is the issue. How to calculate that means that the bonus fraction you have to calculate. Bonus fraction formula is, now you should remember here, this is something which you should remember. That your bonus fraction formula is market price divided by TERP. TERP is theoretical exercise price, which means existing shares at existing price, plus new share at new price. It means total share with total investment. And this is the average, 10.5 divided by 6. So it means that logically, theoretically, mathematically, after the bonus share, the price will become 1.75 in the market. We call it TERP. We put TERP here in our formula. And this we call bonus fraction. And this bonus fraction you multiply only to the date prior to that. Now also please pay attention. I'm not multiplying bonus fraction here. In this period, I'm not multiplying. Because on this date, you already have issued the shares. When you have issued, that is finished. It will only apply to the period prior to the issue. Okay. Now that was actually quite a short question, but we spent almost 20 minutes. In this much of time, you can do a long question exam. 2 marks. Oh my God.
What is the answer?
Answer, I gave it.
1.35.
Here, 1.35.
Oh.
This is EPS.
Okay.
We got the earnings, 7.6 million. We got our, your
Average number of shares.
Your weighted average number of shares, and you got the EPS.
Okay.
So actually, I wanted to do interpretation thing, but we have started EPS. It is also very important. No worries, I will give you that topic also. Okay, so let's read this question. Is it So you got 7.5 million. You issued new shares. How much new share you are issuing? 4 million, huh? 4 million shares.
We have 50 million shares, not 7.5.
You have 15 million shares before. So $7.5 million. So your existing shares. Okay, so let me not call it existing. Let's put it with the dates. So on 01/10/2006, you had 15 million shares. Why 15? Because it says $7.5 million. $7.5 million. Each share is only 50 cents. So the number of shares you divide it with this. 7.5 million divided by 50 cents, you will get 50 million. So you've got existing, your number of shares are 15 million. Then you make full price issue. Full price issue, like no discount, no bonus, no nothing. 4 million shares. So these 4 million shares, when did you issue?
It was issued on 1st January 2007, after 3 months.
Okay. Sorry, here on 01/01/2007. What is your financial statement date? 30th September, right? So these shares will remain with you for the full year, but these 4 million shares, they remain with you only for 9 months into 9 divided by 12. Agreed? From January until 30th of September. And
So we are supposed to multiply 50 million by 3/7 because from 1st October 2006 to 1st January 2007 is 3 months.
No,
where they make the issue.
No, I understand, but this I take for the full year.
Okay.
If I want to do your way, then I should do 15 million. You are saying like this into 3 divided by 12, right?
Yes.
So then here I should multiply 19 million. Then I should do 19 million here. That 18 million. 15 plus 3, 18 million. But I'm not doing 18 million. I'm taking it for the full 1 year. I'm doing incremental. What comes additional?
Okay.
Like here, this is 15 million. It remains for the full period. Then comes this number of shares, which are my full price shares, are this one. So this is 15. Throughout the period, I have 15 for 12 months. So I put full 15. But this is only for 9 months. So I took the 9 months period. And then the last is followed by immediate. It says full market price immediately followed by a 1 for 3 bonus issue. 1 for 3 bonus issue. So how much is your bonus issue then? When you are doing it again 01/01/2007, and now you got here already 18,000 shares. For 18,000 shares, you are offering 3 shares. And I say bonus issue. So how much they become? Your bonus shares will become 6 million.
Yes.
And you make a total. It gives you 24 million. And how much is your earnings? Your earnings are 12 million. Yes. Your shares are 24 million. And therefore your EPS is this divided by this, 0.50. Any question?
So why we are not multiplying this bonus issue by 9/12? We made it same time as the full share issue.
Do you want to make your life difficult? Or do you want to stay happy? Why?
So,
The 18 million.
If you want to stay happy, then do as I say. If you want to make your life difficult, answer will be the same. You need to then add the bonus fraction here and here as well. Because you've got shares.
Sorry?
Yeah. Yes, please.
How did you get the 18 million?
15 I had. How do you get 15 million? Your capital was 7.5 million.
7.5,
And each share was 50 cents.
Yes.
7.5 million 50 cents, you had 15,000 shares. So these are your existing shares.
Okay.
And then you gave full price shares 3 million. So total becomes 18. So 18 is the total of these two numbers. Understand? No? 15 plus
No.
18. 15 you had, 3 you offered. So when you offer,
With 18, yeah, that's fine. I'm okay.
now there are total 18 and you say for every 3 I'm giving 1. So 18 divided by 3 you're offering 6 million shares.
Okay.
Okay. Okay. Let's do next question, please. 249. Now, please, I'm giving you 2 or 3 minutes. You guys will read the question, try to solve it yourself, and then I'll do the solution. You have 5 minutes, 10 minutes to do it, okay?
How do you factor dividend here?
Wait a minute, just give me a minute, I'll read the question. So it says that Plumstead had 4 million equity shares in issue throughout year ended 31st March 2007. On 30th September 2007, it made
144. So 1,000 additional shares.
Bonus issue. Profit after tax for the year ended 31st March 2008 was 3.6 million, out of which an equity dividend of 20 cents per share was paid. The financial statements for the year ended 31st March showed EPS of 0.70. What is the EPS for the year ended 31st March 2008 and the reset EPS for the year ended 31st March 2007? Now, what is reset EPS? So you have to calculate EPS for 2 years, the previous year, and the reset EPS as well. What would be the reset for the previous year? What is the concept of reset EPS? Now, it looks like that I'm actually going back to explain the EPS topic again. Does somebody remember what was the concept of restated EPS?
Sir, I think I missed that class.
Yeah, I missed the class as well.
Okay. So then I picked up.
We need to take back. We need to take the earnings. We add back the interest, and then we less the tax to come back to the.
No, you don't need to do so many things. Actually, what happens? Listen, what is happening? When you are in 2007, you had some EPS. Let's suppose that EPS was $3. I don't know. Let's suppose. Okay, let me explain you the concept. Okay, no worries. Everybody should be relaxed. We had our EPS in 2007, which was, let's suppose, I don't know, $3. Then in 2008, we gave some right issue. You made a bonus issue. You made a bonus issue. When you give a bonus issue, what happens that at the time of giving bonus issue, you do not receive any cash. You just give the shares for free. Now you remember that your EPS formula was earnings divided by shares, right? So the normal business concept is that if I am, so let's suppose my earnings were 100, my earnings were, I don't know, 100,000, and my shares were 1 million, and my EPS is 0.10. Let's suppose that. Let's suppose for a while. Now what happens? The business logic, it says that when you issue new shares, you will receive cash. This cash you will invest in the business, and as a result, your earnings will increase. Let's suppose 120,000, and of course, at the bottom, the number of shares were also increasing to 1.1 million, and then you calculate a new EPS. So the new EPS, which you will calculate, this new EPS will have two impacts. One impact is that the upper side, the numerator, is increasing because you got cash, you invested it into the business, and your earnings should increase, and your number of shares are obviously increasing. So both sides of the equation, there is impact on both sides, and that is why you issue the shares, because you get cash, you invested. Am I clear? Okay. Now, when you issue bonus shares, in bonus shares, what happens? That you are giving shares for free. Nobody gives you the cash. So the business cash is not increasing. And if the business cash is not increasing, its earning will also not increase. Now, please pay attention onto this file. I'm just doing this 120,000 because I gave bonus shares and I did not get any cash. So if I'm not getting any cash, my earnings will remain as they were before. But my, number of shares have increased. So as a result, what will happen? That your EPS will decrease. Do you understand my point? Do you understand that bonus shares, they
Yes,
increase your EPS? Ankit?
Yes, sir. Definitely.
Why? So every time, not usually, not sometimes, always. Whenever you give bonus shares, EPS is tend to go down. Why? You will explain me again.
Yes, because we are giving extra shares and we are not getting any more capital in the business.
Great, you got it.
And if we don't get capital, we cannot invest to get profit. So our earnings will stay the same.
Fine. Now what happens? So when I calculate my EPS for 2007, it was 3. In 2008, my EPS with impact of bonus share, is, let's suppose it becomes, I don't know, it becomes 2.7. I'm doing the same job. My operations, my activities, my revenues, my profits are all the same. You see, my profit is same. Like my earnings are same, but my EPS went down. So shareholders will come, they will say, oh, Mr. Ali, you are not doing good business. Your EPS has gone down. I will say that, listen, my operations are all good. I'm not doing any laziness. I'm working very hard. I'm earning the same money. The EPS has gone down because I gave you people extra shares. And by giving you extra shares, this increased. Do you understand?
Yes.
Now, does this bonus share, it made any difference on shareholder wealth? But they will say, oh, you gave us bonus shares, so it means that now we are getting less money. Our earning per share has decreased. So our wealth or our income, our gains or whatever, is it decreasing? I say no.
Because you're getting more shares.
Because you got more shares. Before you were getting, you had 4 shares. Let's suppose you had 4 shares, and on each share you were getting $3. Okay, these numbers are not here. Let me make it like this. 3. Let me make some numbers which should be multiple. Okay, let me do it like this. I'm saying that before you had 4 shares, and on each share you were getting 2.5 as dividend, as earning. So your total earnings were 10. Now you've got 5 shares. On each share, your earning is, has become $2. Your EPS has gone down, but your total EPS is remain same. Because EPS is going down, but number of shares are increasing. So earlier, you had in your hand $4, 4 shares. And every share I was giving you 2.5, you were taking away $10. Now I'm giving you $2 per share, but your number of shares are 5. In the end, you again get $10, So there is not any difference on you. Clear?
Yes, sir.
Okay. Now, until here, is it clear?
Yes, sir.
Okay. Now, the thing is that you guys are accounting guys, you are doing ACCA, probably you're working in the field of accounting, and still I need to struggle or I need to spend time to explain to you people. I'm talking to you one-to-one. But this is very difficult with my shareholders. My financial statements are presented on internet. Millions of people, they see it. And everybody will see that EPS is going down. How can I go and start explaining justification to everyone? It is very difficult for me. Yes?
Yes,
everybody will be thinking that in 2007 EPS was more, in 2008 EPS is less, and this business is not doing good. So then what I do, I write down here 2007 and I say restated EPS. Restated EPS, which restated EPS means that what if this bonus had been given last year? I gave bonus here. The bonus impact which I apply to 2008, let's apply the bonus impact here as well. I suppose that the bonus was not given in this year, the bonus was also given last year. So if it had been given last year, what would have been the EPS? So I said that, although you say that EPS is going down and I'm doing bad, actually I'm not doing bad. In fact, I'm doing good. Because this EPS which you see, if I apply the same bonus impact on the last year, your EPS would have been 2.58. You should thank me. I'm not doing bad. The same impact I apply here so that the two numbers, they become comparable. The same impact. So this bonus impact which I'm applying in this year, let's see that what would have happened if we had given bonus last year. What would have impact it had on the previous EPS? That is called restated EPS. So the lesson to learn here is that whenever bonus shares will be given, those bonus shares will negatively impact the EPS. Your EPS will go down. And when your EPS is going down, you know that this is bonus adjusted EPS and the last year EPS is not bonus adjusted. As a result, you have an option to provide a restated EPS. That see, if you want to compare this 2.7, don't compare 2.7 with 3. Compare this with this because they both have the bonus impact. So bonus restated EPS, you recalculate the last year EPS including the bonus impact. Am I clear now?
Yes, sir.
Okay. Now,
Yes, sir.
now they say that profit after tax for the year ended 31st March 2008 for current year is 3.6 million, out of which an equity dividend of 20 cents per share was paid. Doesn't matter.
It was given to confuse.
Huh?
This line was given to confuse.
Yeah, doesn't matter. I mean, so far when we were calculating EPS, did we ever try to think about we gave dividend or not? We don't. The financial statements for the year ended 31st March 2007 showed an EPS of 0.70. So last year EPS was 0.70. What I need to do, I need to calculate EPS for the current year, and then I need to adjust this EPS also. Okay? This is what I need to do. I need to calculate my current EPS like this one. This I need to find out how much is that. And then this EPS was given to be 0.70. They told us it is 0.70. So we need to see that how much it would have been here. This one I need to calculate that if I had given some bonus shares, how much EPS I would have gotten the previous year. Okay. So now, should I keep it here or should I delete it? I'll take question down. Okay. I'll take question down. And we here, this is, let me make some settings here. Okay. So now you've got here, how much are you? So you know that your EPS is, you need to calculate EPS for 2008. And of course, I need my earnings and I need my number of shares.
Earnings 3600 divided by 4000. 5000.
How much are your earnings?
Earnings are 3.6 million, 3600.
Earnings and shares. So you've got earnings as 3.6 million. And number of shares are how many?
5000.
5 million.
We should one, yeah.
So your EPS is
0.72.
this divided by this. That's great. This is one thing. You got 0.72, right?
Yes.
And then you need to do your restated EPS for 2007. So reset EPS of 2007, what you should do, you should say that always you have to calculate it like what was your EPS in 2007?
0.70.
0.70. Multiply it with, your shares before and shares after.
Okay.
Before.
Shares before by 4000
divided by after.
Before was 4 million.
0.70 multiplied by 4 divided by 5, which means that your 4 shares, they became 5 shares.
4.
So you put here and you put n equals to sign. So your EPS was 0.56. So these are the two answers. So restated means that if we had given bonus issue the last year, so what we did, if you pay attention, this my EPS of 0.70, I just factored it. That what happened? For every 4 shares, 1 more share was given. So a proportion of 4 by 5. A proportion of 4 to 5. 4 multiplied divided by 5.
Yes, sir. Yes, sir.
Why do I do it by 4 by 5?
You have to calculate the.
It was like this. Listen, you had 0.70, right?
Yeah.
And
4000.
no, forget about 4,000. So
That's
you
4.
multiply with 4. So for 4 shares, how much was the earning?
2800.
For 4 shares, the earning was 4 shares were earning this much, right?
Yeah.
And now you gave 1 share for free. You gave 1 share for free. So it means that your total number of shares they become 5. So what is the average earning now? So earnings do not change. Number of shares are changing. Earnings are this much, same. Or if you want to do it, you can do it with the total numbers. Let's do like this. You were saying 4,000 shares. Each share was earning 0.70. So your total earning was 28. And now you've got 5,000 shares, right? So now your number of shares are 5. So the same earnings are distributed among 5,000 shares. My earnings are not changing. Before I was giving 2.8 million earning to 4,000 shares. Now number of shares have increased. Number of shares have become 5 million. So the same amount, if I have to divide it to 5 million, if I have to divide the same amount over 5 million, what it would be? It would be 0.6, the same number. That's the mathematical logic behind that. Here I just put formula 4 by 5. But you may think, what is 4 by 5? Or why do we do 4 by 5? Why not 5 by 4? Why not 6 by 4? So I'm telling you that your company was giving 0.70 per share and you had 4 million shares. Your total earnings were 2.8 million. Now, if I divide 2.8 million onto 5 million shares, each share would get 0.56.